Okay, so based off the trend lines that we have now, and based off of lesson one when we talked about candlesticks, what are we seeing here? We know this is December 2021, 17th. It's fair to say that we are looking at an up-to-date market. We know that we don't have any information on the other side of this market. We know that we talked about earlier that this market could possibly continue to go up to this trend, and it can also come down. But I kind of see something in this pattern right here. We could be looking at the half of a what is called head and shoulder. It is possible this is a shoulder. It's possible this is a head. Is it possible this goes down to create the other shoulder? And I want to click on a horizontal ray, and I'm going to click it as a favorite and add it to our arsenal of tools. So now we have this horizontal ray that I want to use for a second, right? Because I want to show you, there we go. So it is possible that this market could come here or a little bit higher. Normally a head and shoulders where the shoulders never go above the head, and where it comes here and then kind of comes here, creates that what I call that knee-jerk effect where it goes down, right? Or it could go up past, come down here and come past the trend line, create a knee-jerk effect to make you think that it's continuing to go up, and all along it's working its way back down to form what is called head and shoulders. And head and shoulders, if that's the case, means that it's got to have a what? Double bottom. So if we come here and do a clone this real quick, right? And take this straight down to here. Again, this is not a trend line. This is just a horizontal line. Let's just kind of get it where all the bodies kind of fit. So what we just seen here, and again with our other indicators, we could have, in our various different where we are in our indicators, we could say and assume that this could have been a turning point. And if it is a turning point, is this a head and shoulders creating a double bottom right here? That means till the next month of January where the market should go down based off of what I'm looking on without all my indicators, which is not fair, but I'm just trying to show you that I do see a pattern right there. And that's that trained eye. And again, it's getting away from the subject, but it's something that is a gift of trading that you're going to learn to have when you start learning how to trade and set up your indicators. You will be able to see setups like this. And this would have told you that at this point I may want to get in this market all the way down to here. And it may take however many days it took to form this information. What is this, about 30 days from October to December? That's a 3-month deal. So sometimes you may be into a trade that long. But even though you're day trading, this may be a trade that takes about 2 to 3 months to finish. It's okay. Still wasn't in it 2 or 3 years. Still pull out of it if you want. So that's just some information that I thought I'd share with you. So we're kind of like wrapping up on the information about what is called trend lines. I hope that I will help you to understand the trend so we won't panic like everybody else. The next subject that I want to cover, and this subject is going to be the RSI, the Relative Strength Index. This is a very good subject to know because the strength of the index. Well, no, I want to cover what is called stochastics, right? So our next setup, and we're going to keep this information right here. I'll go ahead and keep that, our trend lines. And we're going to go to this area, indicators and strategies. Click here, right? We're going to go to built-ins, right? And then we're going to take and stroll down till we find S as in stochastics, right? And I have them already sort of like as my favorites marked, so which I usually don't do because I want you to look at this. And here we go. We have stochastics. There's various different stochastics. So I don't want you. We're going to just focus on not stochastic with RSI. We're just going to look plain Jane stochastic. So let's click that as a favorite. All right. So now that we have it as a favorite, let's close out of this. Right. We can go over to here. Right. And these are our favorite indicators. And there it is, stochastic. And we click there. And there we have it. It just placed us a stochastic indicator. Right? Okay. So for our stochastic, right, we have what is called the 80-20 rule, right? So we have the stochastic is consists of two moving averages, right? And the whole theme of the stochastic is to show what is called an overbought and an oversold market. When the market is, but you have, by default, it's actually 20, I believe it's 2080 is default rule, right? I like to keep it at the rule of, or I think it's 3070 is default, but I have it at the rule of 2080, right? So I wanted to go a little higher before I decide to say that this market is overbought. Overbought means that this market is overbought. It's extremely high. People are buying into this market, and it could be the market is exhausted. The market is getting ready to turn. It's not going to be, stay up for long. But it is a sign to look for reversals. And if it's too low, that means if it's too high, it's oversold. If it's too low, it's overbought. So if we see right here where it's overbought, and it's just a matter of time for the market turns and heads back up. Here, it's past my 80 rule, so it's just a matter of time for the market turns back down. In between, I call it consolidating. I don't use it as a rule. I only use it when it comes past the 80 or the 20, which makes me focus. So we look at these lines, right? We look at the 0 line or whatever, these lines, the 20 line and the 80 line. That's going to be your default, right? And you see your what is called default moving averages is 14 and 13 day. And it just allows the market to turn. It allows the the stochastic to give you the information that you need. So stochastic basically tells us whether a market is overbought or whether the market is oversold. Next, we're going to implement what is called the RSI. So we're going to go to our favorites. Again, we could have went to this right here, indicators and strategies, right? Instead of going to our favorites, but we know we can come here. And again, we could scroll down to the RSIs, right? And this is it right here. Now you have to be careful because you have RVI, Relative Volatility Index, and we only want RSI, Relative Strength Index, and I got it as a favorite, right? So I can close out of this. Now, I can still click on that. Let's just show you. I want to make sure you understand this platform while we're going at it. So even though I can click here, I can come here. I don't have to go to the favorites if I really want to. If I don't, so sometimes you lose your favorites, and you have to open it up from here. So you just come here, go to the Relative Strength Index, click it, right? And when you do that, you go and look, and there's your RSI. Now, at a later time, we're going to give these color codes. I'm going to show you how to change the color in these. And all you do is just sort of like right-click and go to Settings, right? and you can go to style, and you can go to background. You can give it a certain color. Again, I think the reason why this, and I don't know why, but I was last told when this looks like this, it means I'm in incognito. And I don't know why my computer keeps doing that. And I don't want it to do that because I wanted to show my colors. I wanted to show. Now you notice you have to be careful with the transparency to not make it too bad because it'll go past your default settings. But you can see the color, the upper band, the lower band color, and all that. So you can change the colors because you're going to have moving averages, you're going to have other indicators. So what you have right now is 3 indicators. You just said 3 tools to your arsenal. The RSI is momentum. It's the strength of the market, measuring the 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 what is called the momentum, the strength. How fast is it going? You know, the might of it. You know, the magic of it. You know, so and then you see the way the prices change. You know, the moves between the extreme lines. You know, the extreme lines is this. And then you have the zero line. And as you can see, I do have it at default. I'm still using the 2080 rule. So the relative strength index. And you can actually, something else that I'll let you know, and I'll go here and just show you. Well, we can go to our quick tool, which is a trend line. You can do a trend line right here. Look at this. Right? So you can actually place trend lines on relative strength index lines and be able to determine, you know, how the breaks of the market, you know, and, you know, as the market goes down and things like that. So that's good information to know if you decide to do that. Okay? So the relative strength index is the momentum, the strength of the market. It's good because it also tells you, like if we see right here, this is overbought, and we see the strength where this market is not really going up to where does it have a lot of strength to come down if we know this is getting ready to go down. We see this RSI is not all the way up here, so it's not really confirming this overbought market right here. So it is possible that this is a continuation to go up. See what I'm saying? So the relative strength index also allows you to evaluate your overbought and oversold conditions in the price of a stock. You know, you can also look at it as well to draw a trend line, as I spoke about. You know, to know where the market had turned. You can use it to back up your confirmation. So what we're doing here is one deal is backing up another, and then I have this on what is called a 14-day. You know, it's on a 14-day. You know, and this and what I'm saying is these stochastics, these RSIs are lagging, meaning that these moving averages are just basically designed to give you an idea of where the market is going and how it's moving within a 14 days. This is the average of where the market is moving, but it lags. It has a tendency to lag, and your whole objective is to predicting where the market is going to turn and use these moving averages as signs and confirmation that your market is going to go in a direction that your technical analysis is basically telling you. So, you know, that's good, you know, and that's better than what you had. That's better information, you know. To me, I feel like it takes me out of doing too much of the, you know, there is things like information, news in the market, things that can affect your knowledge of the market. So that is something you still have to be aware of. Those sheeps, you know, those herds, those people that just because you see this market are looking like as if, you know, it's getting ready to turn, and this indicator is up here, it could be a knee-jerk reaction, meaning the market's just going down just to continue to go up. Again, more indicators is needed. This is only the basics. Um, it is enough to get you an idea of where the market is going to go. However, we still need to have more tools, and as you go, you'll get more tools. You just need to stay with me. You just need to understand where I'm coming from, and understand that this is also a 14-day default. That's going back to saying settings, um, inputs. You see the length, we can go 14, 15 days and stuff like that. So we're going to stay with 14. So you want to write that down, 14 days. You want a stochastic, you want to write down the 14 and the 13, because those are the settings that you're going to want to have your stochastic in, or your RSI in. And, you know, you're going to also pay attention to your colors, you know. Now, I stay with the day chart when we're setting up this chart, right? Because you need a certain amount of candles, a certain amount of information that you're going to need as you continue to go, so that way you will be able to this doesn't really work well, this setup in the hourly and the 15-minute. Now, you can go and confirm a particular direction within that day. One of the candles that you feel like within a couple of days are going to go down, you can jump in the hour and see how it's going and see if there's a turn. That's fine. But you don't want to necessarily use this setup within an hour chart or in a 15 chart. Now, you can use it within a weekly or a monthly. You understand? You can go that far out. It works good with the day. And it might take a week. It may take 7 days. But remember, I try to have this setup, and the setups that I look for designed to only take place and formulate within a 2 weeks time. Now, when you go into 15, you might have to recalibrate, readjust your default settings so that you can. However, I'm not teaching that. I believe that that's a different strategy when you go into 15-minute and the hour. What I'm trying to do is give you the day charts. And if we're all on the same page, when I go live, talk about these trades, you'll be able to understand, and you'll be able to continue to move forward.